repo rate has remained steady at 8.25% since May last year, after the bank steadily raised rates over an 18-month period from November 2021. This meant South Africans having to endure the mantra, rates higher for longer. But there's hope that this mantra could now be nipped in the bud with a rate cut from the Reserve Bank this Thursday. The reason being is that headline inflation has slowed down quite markedly, having hit a peak of 7.8% 2 years ago. Independent economist Elise Kruger is betting on inflation coming down below the Reserve Bank's 3 to 6% midpoint target.
First half's average headline CPI was 5.3%, and so my forecast for the second half of the year is 3.9%, actually below 4%. So we are seeing inflation moderating notably, and that's an additional tailwind for the economy. Now, and also that feeds into the interest rate debate, that there's really ample justification for a cut in interest rates when the Reserve Bank's Monetary Policy Committee meets again.
FNB economist Koketso Mano is betting on a series of rate cuts starting from September, and she explains why.
We see over the next quarter, or at least 4 quarters, that inflation could actually fall below 4.5% according to our current projections. That is a mixture of a stronger rand, low demand in the economy, but also petrol prices you've seen have started to come off, so oil prices have fortunately been supportive here. What that means is that the consumer might have more money to spend at the end of the month, right? From an inflation perspective, so cash flow. But also, that could be something that supports the Reserve Bank starting to cut interest rates, which we anticipate could start as early as this month. So that would be something that also helps consumers in terms of their debt repayments and just balancing the books a little bit.
Group Chief Economist at InvestTech, Annabelle Bishop, echoed Mano's sentiment.
We're expecting a 25 basis point easing. That's a 0.25% drop. And of course, that will happen at the September MPC meeting. We do not believe this will be the only cut. We think South Africa is now entering an interest rate cutting cycle that will certainly stretch over the course of next year and into 2026.
As global market watchers closely scrutinize what the US Fed will decide on the 18th of September, they're also keeping a close eye on the Reserve Bank's next move. Makwe Masilela of Makwe Fund Managers also believes a rate cut is inevitable.
Given what has been happening, inflation at 4.6%, which is almost near their midpoint where they like to see it when it comes to inflation expectation, to maintain the interest rate differential between the rand and the US dollar, that's if the US, they have to cut come next week or Wednesday, then most probably the guys might as well follow suit and cut. We've seen the likes of European Central Bank have been cutting so far, Canada, Switzerland. So I think the whole issue here, our mandate, the single mandate, is to fight inflation when it comes to the central bank, and so far inflation has been going down. Petrol prices continue to go down as well. That bodes well for inflation.
One interest rate cut may not have that significant an impact on households and businesses' balance sheets, but the expectation of a string of cuts suggests that indebted South Africans could experience material relief in the coming months and through next year, all things being equal. Nompumelelo, Siziba, SABC News, Johannesburg.